Okay, so before we go into a more detailed analysis on the 4-hour time frame, we could even start at the monthly time frame just to get the real bigger picture here. Looking on Coinbase, which has data going back to 2014. What are we seeing here? We're seeing on the monthly, it's interesting that there's virtually there simply is no major correction whatsoever on the way up here. It's just, sort of, well, actually, this looks like consolidation, but it's actually a pretty big move just from here to here, 1000%. But all right, the bigger picture basically looks like we had this sort of move up here, but then of course we had this absolute explosion of 1400% over here. Huge correction, which was very much due, and it was interesting because it didn't follow any of the traditional corrections in terms of Fibonacci, at least not using what looks like a pretty rational bottom and top line to use, and so the lines would have been the 786 or the 618. Okay, so we fell below that. And now it's like, okay, what's happening here? We're seeing increasing bull volume, which is a very good sign for the recovery of this market. And this, in addition to what we can see on the lower time frames, is indicating to me that it's rather unlikely that we will break previous monthly lows of 3,100. I think that's going to be the all-time low, most likely. And we would need to see quite strong evidence against that to prove it wrong. And again, the very bigger picture is monster move up, correction, and now an attempt at another move up. So for Bitcoin to really crash below this, there would have to be some fundamental news, something really very problematic for Bitcoin, not just in America, not just in China. We've had bad news in both those countries, or even Japan, but really in many countries across the world, or maybe some major recession or something. But the funny thing is, even a major recession, Bitcoin could thrive, as that's how it was created out of the 2008-2009 recession. When people lost faith in traditional currencies, in fiat currencies. So again, the monthly is showing we had this consolidation over here, green candle, another bigger green candle, and now of course a little bit of indecision over here with a wick going up and a wick going down. We have what's called an inside bar forming here. But of course, we are only halfway through July. We don't know how this bar will end. But let's go now to the weekly to see what we can see there. So again, the monthly is bullish. We had the high, we had the low. Well, actually, it's interesting because I think that if you were to zoom into this, just have this, then of course here you will see it's just then you will see some corrections here. So small correction there, correction there, correction there. It just wasn't visible before. So we have the high, low, higher low, higher low, blah blah blah. Okay, and then if we zoom out again, then we can see very clearly the uptrend with those higher highs, higher lows, higher high, obviously higher low. Okay, so the monthly is in a very, very clear uptrend, and I don't expect the monthly chart to lose its uptrend anytime soon if Bitcoin, given the fundamentals. It's been 10 years now since it was created, and it's pretty awesome to have a monthly uptrend still intact. The weekly chart is also started an uptrend. Why? Because we have a high here, higher low, higher high, higher low, higher high, higher low, higher high. So what does this mean? This means that for the weekly uptrend to break, we would have to break 7,500, which is of course the line which everyone is looking at. I use blue lines as support, red lines as resistance, and this could present a good buying opportunity, but I actually have a reason to think that 8,400-ish range is an even better opportunity. On the weekly chart, two things could happen here for us to reach anywhere in this zone. One would be that this, this sort of consolidates around this area but slowly moves down, and then we get a touchdown in this area. The 2 is that this proves to be a local low, and then we have another sort of move up to test this region, and then have another move down. What that would be called a complex consolidation, where you have one leg down, one leg up, and one leg down before the next powerful move up. So those are the 2 possibilities. In any case, both of them, whether it's a simple pullback or a complex pullback, they both represent the standard up, down, up, down, up, down movement of an uptrending market, which this has proven to have become on the weekly chart. The volume is interesting in the sense that here we have, we don't really see the bullish, well, here we see the bullish increase in volume. Of course, this is where the market really exploded, around the 4,000, 5,000 region. So here you have, again, on the monthly you had the bullish increasing volume, on the weekly you have it here too. And now on the weekly you can see that there was this sort of, this massive move up, and then a very strong correction, a lot of volume over here, suggesting that the bears really are saying, hey bulls, take it easy. You've already made a 350% move up, time to let us take the reins. So the bears came back with a 35% correction, which is entirely reasonable and standard. And what we're really hoping for, what we're going for in terms of the best risk to reward, is the 8,500 region. Now let's look at a shorter time frame. Actually, let's look at the daily before we go to the 4 hour. So on the daily, what is interesting is that we're already seeing this complex pullback. You know, it's very possible that on the daily this is really the low, and that we will move up from here. But for that to happen, and I'll show this on the 4 hour again, for that to happen, we're going to have to break out of this diagonal line here, and of course also break this this previous high. And yeah, and I'll show you on the other chart where I think is sort of this, where is the strong resistance, and what would have to be broken for this to happen. But if that does happen, then the plan will be to buy somewhere on the break of this resistance. Yeah. So looking at the 4 hour now, what I'm seeing is the 2 major support and resistance zones are the blue support box, the red resistance zone. Let's start with the red resistance. So one, we have this line over here, which touches over here and over there and over there. So what does that mean? It means we supported, and then we resisted over here. Okay, we had this 4 hour candle with the long upper wicks resisting from there, coming down. So what does that mean? That means that when we come up there again, there is some possibility that we will resist again. What else do we have? We have this diagonal resistance over here, again, resistance, and for us to break this and this, in other words, for example, if the price goes up like this and just smashes right through there, that would be pretty impressive, and would be an indication that really this is the full extent of the pullback, and that we will go for the next leg up to, you know, well, I mean, that's the other interesting thing. We can look at the let's have a look now. What am I looking for? Fib extension. So if we take this wave over here, then going for a standard 1-to-1 extension, you would be looking at 15,600. Yeah, so that's one way of looking at it. Of course, the other way of looking at it is going on the weekly and saying, okay, well, actually, to be honest, that's pretty much the only way, because you're looking at the waves going up. We have 1, 2, 3, 4, 5, and yeah, so there's 2 sort of opposing theories. One theory says that you should be looking for a 1-to-1 extension. In other words, the length of the previous wave should be targeted for the next wave. Okay, that would be using this theory where 15.6 is the target. Elliott wave theory says that you have a full 5-wave structure, 1, 2, 3, 4, 5, after which, on the correction, you should be looking for a 1-to-1 extension, which of course would have us target all the way up 20,000. I'm actually hoping that we reach between the 8.5 and 7.5 regions so that we can increase the likelihood of this actually being a full 5-wave structure with a proper ABC correction. Just to clarify what that means we have 1, 2, 3, 4, 5, and then we would have an ABC. It should be here, and then A, B, C. And of course, we could get a D and E, but the most common structure is just A, B, C on the come down. And then have a big move up. But for this 5-wave structure to hold, we really do want to see a move down, a move up, and another move down for that to happen. So that's kind of the ideal scenario. Right. So what else are we looking at for resistance? The previous 4-hour resistance is up here, 11,100. This is not a very strong resistance, but it certainly is notable. This line over here. What I mean is that if we break it, it doesn't mean that we're going to break out of this whole pullback structure. It's just a good sign for the bulls that we might. The other thing we're seeing, of course, is the volume. So the price. This is another sort of resistance zone at this right here. So if we cross this, then the volume sort of less and less, which means that there was a lot of interest at this. So in other words, if we break this, it means there was a lot of interest at this price previously, and a lot of fighting going on to see who's going to have control over this price. So if you can get above it, if the bulls can push above it, it means that they have a small victory over the bears, and that these bars, of course, are less hard to fight through. That's figuratively speaking. So this brings us with a red box over here, where if we were looking to short, ideally it would be something like here at the intersection of these diagonal lines. I'm not really looking to short just as yet. I'm really looking for a buy here. On the buy side, we're seeing. So this was a potential support on the potential diagonal support where we had a touch 1, 2, and this could have been 3. And I would take this out now. Some people might say, oh, this was a fake out, which means that that the bears sort of tried to make it look like it was going to break to the downside, but then the bulls said, no, actually we're going to take those stops out and actually push it way higher. I wouldn't speculate too much about that. The point is, this line really isn't just that relevant anymore. So the bigger line, the much bigger diagonal trend line that we're looking at is this one now, and this is relatively important to hold, although this 7,500 is even more important. So why do we have this blue box? Well, one is that if we get a 1-to-1 extension of this wave going down, in other words, A, B, C, then we'll have the target would be down here at 8,850. This, of course, is, I can draw it a bit more clearly, is the diagonal support line over here. So we have these two diagonal support lines intersecting, and we have the 1-to-1 extension of this wave in this area. So really, ideally, it's right over here that we catch it. That being said, so actually what I'm going to do is I'm going to put 2 boxes here just to indicate these sort of 2 potential support zones. And the second potential support zone is over here. And And the reason why this level is relevant is, well, let's go to the daily to make it more clear. Let's remove drawing tools. So on the daily, if we look at a correction of this whole move going up, where the volume really started, that's usually the good place to start the Fibonacci retracement. We see the golden zone over here is all the way up to 7.8 and all the way down to 7.5. So that means that there's a very strong chance to be a reaction here, not only because we have the Fibonacci extension here, the Fibonacci retracement zone, but also because this has been a previous support, right? On the weekly, this is a support, the 7,500. So really, this line, if this doesn't hold, it's going to be a little bit concerning, especially in terms of trying to find a bullish entry, because it's going to be hard to find a stronger zone of confluence than this. And this, of course, also represents a reasonable zone of confluence because of all these lines intersecting and the Fibonacci. So yeah, that's what I'm looking at. Until we reach either of these zones, I'm not going to be trading this. And that's pretty much it.